This is Paul Singh, the market speculator at bullsonwallstreet.com. Today we're going to talk about recent winning trade SOXL, that's a semiconductor ETF, triple leveraged. And you can see here we got in on 10/13. We got out yesterday, October 27th, in at 52.49, out at 48.17 for a $2,800 gain. The key to this setup, number one, it's a trend pullback setup. But the key to this setup is relative strength, which we've been focusing a lot in these recent videos because we're in a range bound market. And this is what you have to key in on range bound markets. Range bound markets are the most difficult markets to trade. Now, many would think it would be downtrending markets, but that's not actually true. Sometimes those are the best markets to trade because one, you can short the trend and you've got a trend to short, you get a lot of volatility, you can make a lot of money. And number two, when a bounce does come, you often get strong bounces. So even if you're a long side trader, you can wait for the strong bounces and play those if you're hesitant to short. But the range bound markets, you get generally, it's just back and forth and you continually get chopped out of your trades no matter what direction you're trading. And if we look here at SPY has been in a great trend. Focus on these top two charts here. I've got them side by side. One is SPY, one is SOXL, the trade we took. So if we look here, SPY has been in a nice trend in 2016. But just before the Fed announcement on interest rates, we had this big gap down based on some news related to Fed officials. And since that time, we've essentially been in this tight range of about 212 to 217. And now we're in a holding pattern going into elections November 8th. So we're in a range-bound market. You're generally, for the most part, stocks are moving in tight ranges within this area here. And if you're taking a lot of trades within this range, you're probably going to get chopped out. A lot of back and forth here. So you might get a win, you might get a loss, get a break even. You're basically in quicksand here and probably not taking too big of a loss unless you're trading really poorly, and not too big of a win. But what I always do in these types of range-bound markets, and you can see here, we were coming off, this is my yearly percentage gain. I was around 47 to 49% in this period and made a run to 54% during this range because we have focused on relative strength. SOXL was relative strength. Brazil was relative strength. X was relative strength. Brazil again. Oil again. AMBA. These were all relative strength plays. Actually, most of the losers I have in here are trades that weren't related to relative strength. Biotech, LABU, that was a beaten down stock, not showing relative strength. Alta was an earnings play, so not really related to relative strength. Oil, it was just oil and not really related to what's moving the market, although it actually was showing some relative strength. But at any rate, we're looking for relative strength. Now, side by side, compare these two charts. You don't have to, I mean, there are scans you can use, but really you can just use the eyeball test. Whereas during this period from September to now, we've been range bound here. What has SOXL done? SOXL during that period, we can draw a straight line this way on SPY. SOXL during this period, and that's semiconductors. The semiconductor sector and really the whole tech space has been showing relative strength, but especially social media, internet, semiconductors here, we draw a line upwards. That is what relative strength is. It's showing relative strength to the market here. So we don't want to complicate things. We don't need to do any calculations, use any indicators, just use your eyeballs. Semiconductors have been up, SPY has been sideways. That was our indication of relative strength. So now we're looking for an entry and we got it here on this hammer. And now I'm going to switch over, since we're not focusing on the comparison so much, let me switch over to the chart here. And you can see where we entered. We'd actually taken almost the same setup, trend pullback, test of the moving average, show of strength. This was off a bullish engulfing, almost a bullish engulfing or a piercing pattern back in September. And we basically got the same pattern here in October. This time it was a hammer where it looked like the 50 was failing, and we got in on this show of strength. Trend pullback, is the specific setup to the stock. But then we're relating it to the market, and we're seeing relative strength in a range-bound market. And that's part of the problem with swing traders is you look at the setup specific to the stock, but you're not thinking about the big picture, and you really need to focus on the big picture. Here with SOXL specific to the stock, now we entered here off this hammer, and then we exited at 48 here. Now it's pulled back since, but we timed this pretty well near the highs of the day here. And another adaptation to the market is normally I would actually be playing in a strong sector like this. I would try to play through a breakout, maybe 50 here, and see if we could go further. My range here was near resistance 48 to 50 because I know we're in a range-bound market and there's a tendency to pull back, which is what happened here. So again, your market analysis is factoring in to your stock specific or sector ETF specific trade. So that's what we did here. So remember, anytime you're in a range-bound market, key in on those relative strength stocks and sectors and look for those for basically the only stocks you're really going to play during this period that you're trading more infrequently. So remember, guys, this trade was alerted in Bulls on Wall Street. We've got the swing trade alerts here. You can sign up here at the bottom. Monthly plan, yearly plan is half off. And I'll see you guys next week with some more videos.